I'm no stranger to these difficulties of growing an account. In 2013, I was a one-lot trader. 90% of my trades were one lot, and occasionally I would use a two lot. In other words, I would risk the minimum increments per trade. Okay. Now, in those days, we didn't have things like micro lots, so making the jump from a one lot to a two lot was extremely difficult. Why? Because it's 100% increase in the risk that we're taking per trade. Now, factor in those days, we had around $3,000 of cost every month, including desk fees, licenses, execution platforms, round trips. Okay, that meant that I had to make $150 a day just to break even, and that's not even paying myself a salary. Now, to put it into perspective, a minimum wage in London back then was around $2,000 per month. In other words, my break even went from $3,000 of cost plus $2,000 of wage. In other words, I had to cover $5,000 a month just to break even. That works out to around $250, $260. Okay, and that meant that effectively for the first year and a half of my career, I had zero account growth. I couldn't grow an account. I didn't know how to grow an account. It was simply me just rocking up and covering costs. And more often than not, I wasn't even paying myself a wage. So when you look at the raw numbers, it's hard. Okay, you can see it on this graphic. What makes it harder is if you have a small account balance, the fixed costs make up such a significant percentage of your account. Now, the key trick to understand is that as your account grows, your position size grows with it. As a result, you're investing more profits back into the account, and the account eventually hits that point where the fixed costs become insignificant. Now, let's be real for a second. Okay, let's assume you start with an account balance of $10,000. If you have $500 of cost coming out every month, okay, is it feasible to pay yourself $1,000 survival wage a month? The simple answer is of course not. Okay, because if your fixed costs already represent 5% of your account balance, it makes no sense to draw down another 10% of your account just to pay yourself a wage. Okay, so effectively, if you do this, if you overburden yourself on day one with heavy costs, you're effectively dead from day one. Okay, now the entry point to trading is very high. Why? Because, well, one, you need capital to trade, to invest, and two, you ultimately need savings to pay your bill. And this is something they don't always tell you. Everyone assumes that you come into trading and that all you're going to need is, to put down $5,000 to effectively, trade in the markets. But the reality is you probably need double that. You need $5,000 for trading and you need $5,000 of savings to pay the bills every single month. Okay? The reason is that you cannot rush how quickly you're going to learn and profit from the market. So what typically happens is traders come into this, they're insufficiently capitalized and they don't have savings. They're then expecting themselves to make money already in month 3, 4, 5, and 6 and start to make back all that money. And the reality is everyone will start to profit at a different point in time. And typically, to be harsh, to be honest with you, you're going to need sufficient capital and sufficient wages to survive at least 1 year without any expectancy of earning an income. Okay, 1 year. You've got to factor that in. If you can do that, you're ahead of many other traders. Now, is it feasible to grow a $10,000 trading account to $20,000 with $500 of cost every month? Sure. If you're consistent, of course it's possible. If you're not consistent, save your money. Don't put your capital at risk so early. And this is, again, another mistake traders make. They want to start trading live after 3 months. Okay? The first mistake that they're making is that they step into the live market because they need to pay themselves, whether that's they want to cover costs or pay themselves a wage. They just want to get in. And I get that. But this is 100% sure way to guarantee you're going to fail. Why? Because what will happen? You'll slowly leak capital due to inconsistency and a lack of edge. Okay, so your account balance will start at 10,000. After month 1, maybe it's 9.5. After month 2, maybe 9. And then maybe you make a few stupid mistakes and you're down to 8 after 3 months. Eventually, you are going to tire. Eventually, you're going to be an emotional wreck and you're going to make an error. You'll have a drawdown. And at that point, you're going to move back into a sim environment. Except the difference now is that you're 3 months into it. You could still be at $10,000 if you stayed in a sim environment. But because you went live too soon, you're now back on a sim, learning, but you have 20% less capital to work with. So do not rush the process of going live. Now, what you can see through this image quite clearly is that as we can increase the position size, so if you see at the bottom here, as we increase from 1 lot to 2 lot, yes, psychologically it's difficult because we're doubling the risk. It's a 100% increase in the risk. But when we go from 2 to 3 lots, suddenly it's only a 50% increase in risk. And when we go from 3 to 4, it's only a 33%. So position sizing becomes psychologically easier as we increase. Okay. Moreover, think about it. To go from $10,000 to $20,000 is a big doubling effect in the trading account, and to do it with a 1 lot is quite difficult. But to go from 20 to 30,000 when we're trading more size is slightly less difficult. And 30 and 40 and 50. In other words, as the account grows, because the position sizes are getting bigger, we can get to those higher benchmark capital account growth levels faster. More importantly, when I'm at $30,000, 10,000 of that is my initial capital, 20,000 is profit. Think of the psychological burden that no longer exists because you're trading with profits. And this is again something crucial that not enough traders think about. You've just got to be consistent in the beginning. Get yourself to 20,000 through good trading. And all of a sudden, you'll find that pivot within your career, at which point your fixed costs become insignificant and it all becomes a great deal easier.